Hello everyone, how are you? Let's start off with the star. Back this summer, can everyone see the S&P chart? Hi Adam, hello Val. Adam, Abel, how are you? During the June time frame, we were talking about a rally into late summer. Really, summer isn't over until the equinox in late September. And we talked about a 1435, 1450 target. With today's action, to me it looks like we're no more than 2 to 4 trading days away from what could be a significant reversal. I don't know if it's going to happen on the NFP number tomorrow, or we're just going to have some follow through into early next week, but up around the 1445 level, I'm going to start probing the long side of the dollar. We are diverging a bit on the daily. I haven't done my work on the intraday, on the 60-minute. Not sure if today's action blew it out or not. Let's take a quick look. But I do believe that we're at a fairly significant inflection point here. That's going to end either before the Fed announcement next week, or it's already priced in, or one more pop into the FOMC meeting. So let's look at a month, which is going to have implications for the dollar. I talked about a 127 euro. We're a stone's throw away from that as well. So the 60-minute, this is a confirmed high on the 60-minute chart here. So it may have to do some backing and filling. This is a 60-minute chart. But to me, it looks like we broke out of this triangle, and they're usually terminal type thrusts out of a wave 4 triangle up here for a final fifth wave. My projections are 1445-ish to keep a number on for the S&P, to be aware of that. Of course, you know, we're all FX traders, so what's important to us is what do we do with the dollar? And last week I was talking about the potential of a 127 euro, and that most likely would give us an 80.50 or so dollar index target. And we're a day or so away from that, and where I'm going to be probing the long side of the dollar and risk off trades. Did nothing right today, so I'm looking for the 80.50-ish. I know there are some long-term moving averages that come in there. We've taken care of all the bulls that were bullish the dollar in June. They're gone, and now it looks like we're again a triangle, only the opposite way to get some type of flushing action. Let's face it, Draghi brought the big guns. Right now, Andy, I'm considering that we could be set up for a pretty substantial correction, at least, and I won't rule out this low in the dollar being an important inflection point for us eventually to take out 84 and head up towards the upper 80s. So I'm looking for a pretty good run in the dollar. I'm expecting it to be sharp and quick and dramatic. Looking for risk off in fact, the crude oil market today, just finishing up with the dollar, be alert at this 80.50 level. We're only about 50 points away, so maybe that's another 80 pips or so in the euro. And when we get to the pound, I'm looking at 160.40-ish. It could be similar to May action, yes. And even if it's half as much, it's a pretty big trade. So I'm alert for this. I've been talking about these levels, so you can't talk about levels and be patient waiting for them, and then when they get there, not try it. Can the dollar continue to work lower under 80.50 and, you know, try 80, 79.5? Of course, anything can happen, but the pound right now is already 61.8 above the 1100 pip decline it had. and EURUSD is not quite 50% back from that retracement at the highs that we had last spring in the 133.20 level. So I'm going to be looking to take advantage of the short euro since I think it's weaker, and EG, which is kind of a market message to me, is really not confirming the recent rally highs we've had in euro. We'll take a look at that. And even though I think there could be another 60 to 100 pips to the downside in Canada, I would now be alert for a buy into Canada. In fact, one of the only risk markets to close poorly today was the crude oil market. So I think it's going to be affected too by this risk-off trade and rally in the dollar. Yes, this current trend, a correction, right. And then the long-term trend reasserting itself. So you can't say that for S&Ps. I mean, what is the long-term trend there? Okay. And can you say that for gold and for crude? What I'm saying is there are downdrafts of different magnitude coming across all risk trades. Is that definition okay? Everyone get that? Give me a Y if you do. Okay. So if you look at the crude oil market, look, we didn't make new highs. We put in a reversal day to the downside. When I get to Canada, we'll be talking about some of the zones that are going to look attractive to me. So basically, crude looks the worst of any of the commodity markets. It looks pretty vulnerable to me. You can't rule out even 50% retracement is going to take it back to $85. Should be a good pop in Canada. And I believe we've covered all the outside markets. The only one, I finally started to ignore the yen because I am looking for a risk-off trade, and it's starting to pop as the bonds look, at least at this point, to put in a failing rally. We view the TLT, the ETF, the 20-year Barclay Treasury. Pretty negative action here. You know, all we did was retrace this big decline that everyone was aware of. I was looking for a big yen rally, only got about a couple hundred pips, and bonds are coming off pretty good today. That explains the yen pop that we had today. The only caveat being that if I'm right about S&P setting up for a pretty good decline and crude coming off and even the gold coming off and the dollar bottoming, it's usually not the most conducive time to be short bonds. It could be different this time. Here's a quick look at the gold. Even gold, I think it's stretched up here, will be vulnerable to a dollar rally. Close about mid-range here. Barely confirming this last high here on the daily. So I think that we're getting close to an inflection point across the risk trade, and the correction in the dollar could be close to ending. Let's get to the pairs now. Starting off with USD CAD. Pretty big wash out here. What I'm looking at here in the Canadian is the potential that this was ABC for A, and this was a B wave, and we're finishing a C wave in here. And 97.60-ish was the number off this big rally that we had, and this was a nice rally. Okay. The May decline and rally in USD CAD, this was bigger last year. So we still could be correcting this whole thing in Canada from last year. And here's a line you may want to insert here. Tagging off this low right here and this low right here. Kind of has a look of a bit of a wedge down here, and we come in right around 97.40-ish. So I'll be, okay, I'll touch on silver. So what we have here on shorter time frames is Canada will have to do a little work because it's not diverging. It has to do some work. We have confirmed lows on the 1 hour. We do have some divergence on the 4. But price is going to be more important to me than RSI, so 97.40. It's going to be interesting to see how it gets there. But those are my numbers. Be alert for reversals and divergences beginning in USD CAD. On the daily, we're making new lows. We haven't taken out the 98 low, which is back here. That's where I think we're going for. We held a little bit here, but you look on the daily, even another 60, 70 pips, we're not going to be confirming the RSI, even with today's negative action, is sitting there at 36, so I don't think it's going to take out 30 on this washout, and I'm looking to be a buyer because of daily divergence, because of the weekly formation, because of the 61.8 fib level that never got touched here at 98. I was looking for 97.40, 97.60 here, never got it. Maybe we're going to get it now and then have a pretty major move to the upside. Is everyone clear on my USD CAD analysis and what I'm favoring going into this inflection point? Give me a Y if you are. You don't have to agree with me, just understand what I'm saying. That's what makes the market. Okay, great. Moving over to pound dollar. I have a lot of confluence up around the 160.40-ish level, so that's another 100 pips or so from here. We are diverging on the 4 hour, barely. Okay. Daily, we've still done nothing wrong. Diverging from this last high, though, we're still under 70. What's interesting about pound dollar is, let me demonstrate this, that from here, the high that we had this spring to the low, we're trading over 61.8 right here. So perhaps we're going for the 76.3 or so, but we're trading above it in this blow-off stage. So I'm looking for about another 100 higher to start taking a look at that. And how that differs is when you look at EURUSD and you go the daily, we're not even 50% back yet. Okay, so getting closer. So what's demonstrating more relative weakness is what's happening here in euro on the daily. Pound dollar's already exceeded 61.8 back of this decline, and here we're not quite 50% back. This looks like 27.80-ish, 27.5. So the euro is going to be the preferred short, although I think you could short the pound too if I'm right about what's going to happen in the dollar. One of the reasons why I think the pound is going to be vulnerable this time is what? What kind of low did we have at the end of May, early June? That could be, yeah, you could work it that way. Yeah. What is negative about this picture at the low in pound dollar? What kind of RSI? What kind of low is that? That's right. Able is to confirm low. Markets rarely bottom off confirmed lows. Okay. They can, but it's the exception to the rule. Renamed RSI from relative strength index to real simple implicator. The implication of a confirmed low or high is there's a high probability for another low or high to follow that may or may not be confirmed. Give me a Y if you get that. Compared to when you look at the euro daily, At the lows, we had divergence. Okay? So this had a more solid technical bottom, even though the pound outperformed because we're diverging here. And then my other potential reason for one more break to take out the 120 level is what? What looks incomplete to me? What about this formation in euro is incomplete? Not saying that it always has to be that way, but what is one of the formations that I've taught here that makes it look incomplete? That's right, FX. Very good. So we're still missing that last push down towards taking out 120. Maybe it diverges again. Actually, when I look long term on a monthly euro chart, here's where I think we're going. And here's one drive, here's two drives. Here's the first one. Here's the second one. And the third one would give us a 112.50 euro. Okay? So it's possible for this next explosion up, we take out 120, and you can't rule out 112 in the euro. That's a monthly count. Again, a third drive. And really, if you take a look at it from the inception of the euro, I don't think I could zoom out anymore. Okay. If you do a fib count from the year 2000 of 8180 to the highs we had up here, we're only talking about this mainly being possibly a long-term correction down here. Okay? A long-term correction in an uptrend. When you look at the monthly, I mean, this has really seen the forest from the trees. I mean, we start taking out 120, they're going to be talking about the end of the euro. But maybe this is the end of the correction of the euro at 112. Just something to write down that might have historical significance a year from now. Okay? So that's my big picture on euro. Yes. It could be a continuation formation that all that we've seen since the financial crisis in 06, the top, and the crisis in 07 is a correction of the big bull move we had in euro from the new millennium. Okay? So I'm thinking up around, when you look at the shorter term in the euro, we're starting to diverge all over the place. We've made new highs here, new highs here. What I find interesting is that let me find the Swiss. While euro's making new highs, taking out the high from here on the 31st, US dollar Swiss hasn't taken out the low. So this is giving me a little bit of a message that this euro rally it's not confirming. I appreciate that, Andy. Does everyone notice that when I look at euro USD, we've taken out the August 31st high. We did it a couple times already, maybe another time. When you look at US dollar Swiss, we haven't taken out the low from 831, which is a little bit of a market message to me on my correlation. Everyone see that? Who noticed that before today? Who's been paying attention to the correlations I've taught? And notice, yeah. And you see how one is not confirming the other? It's telling me, yeah, okay, it's telling me there's some inherent strength, so I'm going to be looking for some long opportunities in US dollar Swiss. And then the other part of the bear case starting to develop is in the euro pound. You know, we haven't made a new high since the 28th. We're not confirming the new euro high that we had today. Perhaps we get one more shot up, but this again is not confirming euro strength. We're not making a new high here like we are here. So that's another tell that the euro rally is possibly in its latter stages. Now, really, the weakness of them all has been what currency, before I pull it up? What's really been the weakest currency against the dollar? I'll give you a hint. China and copper. That's right, buddy. So here it is. We held down here. We had about a 500 and 106.30, 450 pip decline. Euro's making new highs, pound's making new recovery highs, and where's Aussie? So most likely we're just going to get some type of fib retrace between 103.80, 104.5, and this is going to be a failing rally. It's going to be a preferred short because of its tight correlation to the S&Ps. So it's been giving me another message here that with the strength of commodities, the strength of the S&Ps, that when a currency cannot perform, when conditions are conducive as can be from outside markets and markets that it correlates with, the message is there's weakness in that currency. So instead of trying to be a hero by being short the pound or being short euro, really your more conservative short is to sell a failing rally up here in Aussie, looking for the next decline to be equal to or possibly some fib extension of this 460. So, you know, it could end up being 700 pips from wherever we top. We could go to 104 and then go to 97. Okay. So that's really your weak sister, is your Aussie. The dollar's making new lows for the correction, and where's Aussie? 400 pips off the high. Okay. I could see it. So then maybe we trade 104.50 first. That'd be about 61.8. Okay. So we all have it cased. Those are all the pairs that I cover. What's your most valuable currency? That's right, Shaw. That's right. Okay, Chuck. So I want to thank everyone. Nice to be back. I've been on vacation. Andy thinks the Swiss is okay. You're welcome, Abel. Thank you, everyone, for spending your most precious currency. I hope I've opened up your eyes to a few ideas that seem pretty exciting, some type of turning point here. Remember, down is faster. That's because of gravity. Thank you, CS. So good hunting to everybody. And I hope I'm adding value to your experience here at FX Street. You're very welcome, Mauricio. Anyone's looking for a good analyst or trader, let them know I'm available. You're welcome, Andy. Adios.